In the last video, I told you I'm done jumping from strategy to strategy. In this video, I will be showing you the model I will be focusing on. It's a 9:30 a.m. opening manipulation in line with the daily bias. So first of all, why I'm choosing this model. This model gives me structure. Before any trade, I need three things: the daily bias, the manipulation, and the confirmation. Without those, I can't trade. So, as I said, bias, manipulation, confirmation, execution. So, the first thing is always before the 9:40 a.m. at around 9:15, I will be choosing and reading the daily bias. Where is price going? It's the most important question we have to ask ourselves. After that, bullish, we only look for longs. Bearish, we only look for shorts. There's no bias, we can't trade. If there's confusion, there's no trade opportunity because without clarification on the graphic, we can't be trading. The step number 2, at New York Open, which is the 9:40 a.m., we will be waiting for the volatility, and after that we just need to wait for the first move. The first move will be always a trap. And why? In the market, for you to make money, someone has to lose money, and most of the traders lose money. So with that being said, we need to wait for the trap that the smart money or institutions, whatever you want to call it, will be playing, so they can have the majority of players against their trades. In this way, they will be winning their trades after the manipulation. So the step 3, after the manipulation, which is will always be a sweep against the bias, then, which means bullish, we sweep the lows and then we go up, or bearish, we will be sweeping the highs and then we will be going down. Always, but always, this is the most important part of this strategy. Always wait for the trap. Okay? After the step 3 comes step 4, the execution. A liquidity sweep, a structure shift, a retracement to an order block or a fair value gap. After that, we can entry, and the stop loss will be above manipulation. Now let's jump to the chart and I'll show you an example. First thing will be always identifying the daily bias. How do we do that? We look for the uptrend, downtrend, or range. Here we clearly see the moves are happening lower. We are forming lower highs and lower lows. So for now we are bearish. After that, we would jump down to the 1 hour chart, and I will be showing you an example that happened last Friday. So we are clearly on a downtrend, so we will be looking only for the shorts. Before 9:30 a.m. we would be at this candle, right? So what do we have to mark here? We mark the order blocks, and we mark the high and the lows that might be targeted as liquidity. We jump down to the 15 minutes. Let's see what we have else in here. So at 9 we were over here, right? 915. We add this high, right? And we have this fair value gap at 915. At 9:30 we opened here, right? We jump to the 5 minutes, and you'll see that in here what happened was 9:25, 9:30 open, right? Market goes all the way up, inducing every single trader, retail trader, that we might be changing to a bullish order flow, let's say. We sweep the high, and then we go lower and lower and lower. So for us, the entry would be after this market shift over here, right? After this market shift, we would be entering on a short trade at the open of the next candle, using our stop loss above the last high, which is this one, and going for either the next 1 hour liquidity, which would not give us the intended risk to reward. But if we look to the left, we have other lows that we can be targeting, and so not this one, this one. And so if we go for those lows, we are at a 1 to 2, 1 to 1.5, 1.6 actually. So for me, a 1 to 1.5 will be more than enough, because what I'm looking for is consistency. It's not trying to catch those stupid moves, those stupid risk to reward, those actually insane, like 1 to 20, 1 to 10, 1 to 15. For me, catching a 1 to 2 will be more than enough, because if I catch 2 trades, imagine, let's say we catch 2 trades of a 1 to 2, and we lose 2 trades of 1 to 2, we will still be profitable with 2R. So being profitable with 2R, for me, in the future, on one account of like 100,000, that's like 20,000 euros, dollars, whatever. Like that for me, making that in a week, it would be completely insane. And I will do it, no doubt. I just need to be consistent with the execution of this strategy. So this strategy is not proven yet. I have to gather all the data on the backtesting, so I can be 100% sure that it will be working and it is an edge in these market conditions. For that, I need to backtest the strategy for 100 trades at least. As I said in the other videos, I do not want to master 100 strategies. I just need one proven strategy, one proven edge to execute consistently in the market. So with that being said, I will be focusing on the daily bias, on identifying the manipulation, and on the entry model and the execution. This is Trading Bill. Make sure to follow the journey.